Welcome to the channel. Today we're going to be pulling back the curtain on one of the most controversial topics in personal finance, and that's how millionaires pay little to no money in taxes. That's right, you heard that correctly. Today we're going to be covering how millionaires pay little to no money in taxes and how they do it and how you can too. We're going to be diving into all of that in just 1 minute. Hi, my name is Thomas Castelli. I'm a CPA and tax strategist who helps real estate investors and business owners navigate the tax code to keep more of their hard-earned dollars in their pockets and out of the government's. If you do like today's video, make sure to hit that like button, drop me a comment, and subscribe so you don't miss out on future tax savings videos. With all that being said, let's go ahead and dive right in. All right, so the first thing to understand is that the wealthy play by the same rules that are available to all of us. They don't break the law, they're not evading taxes, and they're not usually doing anything shady or nefarious. Instead, they simply understand and take the time to educate themselves on the legal strategies that are built into the tax code, strategies that are available to everyone, including me and you. The difference is, again, they take the time to educate themselves on these strategies, and they often work with tax professionals who help them implement these strategies into their business and investing scenarios, leading to lower taxes and in some cases, zero taxes. All right. So just to drive that home, they're not doing anything illegal. They're just educating themselves and surrounding themselves with tax professionals who can help them navigate these strategies. Now it's time to actually break down what strategies, what tools, what frameworks are they using to actually reduce their tax bills. All right. So the first thing to understand is one of the most powerful things available to you in the tax code, and that is a deduction called depreciation. All right. So most millionaires, they're buying assets, and one of the big assets that they like to buy is real estate. Now, the thing with real estate is, although it tends to appreciate or increase in value over time, the actual physical real estate tends to fall apart. There's wear and tear. There's deterioration, right? The asset wears out, and you have to replace certain things. So what the IRS allows you to do is deduct the cost of your asset little by little, and in some cases, you can actually accelerate and increase this expense over time. Okay. So the best part about depreciation is that it's a non-cash expense, meaning it only exists on paper. All right. And in some cases, through the use of cost segregation studies and bonus depreciation, your depreciation expense in a given year can be so large that end up telling the IRS that you're losing money despite the fact that you're generating positive cash flow. All right. So in short, depreciation is a deduction that decreases your taxable income, but not necessarily your cash flow. And it's a big component or a big piece in the puzzle of how millionaires pay little to no taxes. All right, moving right along to the next strategy, and that is tax-free income through borrowing. So again, millionaires tend to acquire assets like real estate, stocks, and other assets that increase in value. So instead of selling those stocks or that piece of real estate and having to pay capital gains taxes, instead they use their assets as collateral and borrow against them. And the best part is when they borrow against their assets, the loan proceeds are not subject to taxes, right? So you have a piece of real estate, for example, you go to the bank, you get a loan out against that real estate, and the loan proceeds that you get or that the millionaires get, that they're using these strategies, they are not paying taxes on that income. All right. So that is the strategy here. You buy assets over time, they appreciate in value. You get loans against those assets by using them as collateral, and you take the loans proceeds tax free. Now, there's a bonus tip in here. If you use those loan proceeds, okay, if you use those loan proceeds for business or to acquire additional assets, in many cases, the interest will become tax deductible, increasing or decreasing the amount of income that you pay taxes on. All right, if you've been following along so far, then you're beginning to see that real estate, there's a common thread here. Millionaires tend to acquire real estate because there's a lot of tax benefits to owning real estate. And one of those tax benefits is the ability to use the 1031 exchange. So when you do have to sell a property, what millionaires will do is they'll go ahead and use a 1031 exchange to defer the capital gains taxes on that sale by reinvesting the proceeds into another property and that allows them to continue growing their wealth. So 1031 exchanges are another strategy that millionaires are using. Moving right along, millionaires tend to own businesses, and businesses tend to have more tax deductions than people who have jobs. All right, they're able to deduct things like travel, meal, and even the home office, things that are related to their business. They also get access to a deduction called the Qualified Business Income Deduction, or QBI deduction for short, which allows them to deduct up to 20% of their business income when they meet certain requirements. And then they also get additional benefits like the ability to deduct their health insurance premiums, retirement account contributions, although that's available to a lot of us, and even vehicle related expenses. Believe it or not, millionaires also tend to contribute to their retirement accounts, like their 401ks, which allow them to get tax deductions and use other strategic mechanisms to lower their taxes that relates to retirement accounts. I'm not going to bore you with the retirement accounts. They're available to everybody, very common. Chances are you already understand it. If not, go ahead, subscribe to the channel. I have other videos on retirement accounts for you to check out. All right, now moving right along to charitable contributions. Millionaires tend to have a lot of money, a lot of disposable income that they don't necessarily need to live, and they like to give back. So one of the ways that they give back is through donating to qualified charities, and in exchange, they do get tax deductions. There's also something called a donor advised fund, which allows millionaires to contribute to the donor advised fund and spread out their contributions over time how they see fit. All right, next thing that they use is something called tax loss harvesting. Now, not everybody's investments are always going to be profitable. Sometimes you do face losses. And when you face losses, what you can do is you can sell your losing investment at a loss, and you're going to lock in what they call capital loss. Now, capital losses can offset gains from winning investments. In fact, you can also deduct up to $3,000 of capital losses against your regular income every year. So tax loss harvesting, another powerful tool that millionaires use to minimize their tax liability. Next, we have something big, and this is another real estate strategy, and this is called the real estate professional status, one of the popular ones in the world of real estate investing. And this allows full-time real estate investors to use losses from their real estate, often generated by depreciation that we discussed earlier in the video, to offset their active income from their W-2 job, perhaps, or business that they are running. And it's quite possible to have a high income, have a couple where one is a very high income earning doctor, lawyer, or in another profession or business that's generating high amounts of income, and then wiping out their taxable income to zero if their spouse can qualify as a real estate professional. I have a lot of videos here on the channel about the real estate professional status, so go ahead, subscribe, and check those out. If you do want to learn more about the real estate professional status, it's a very powerful strategy for full-time real estate investors and a key tool that millionaires use to pay little to no money on in taxes. All right, the next one and the final one here for today's video is going to be utilizing the step up in basis, okay? So what happens is, what millionaires will do, especially real estate millionaires, is they'll acquire large amounts of real estate and stocks throughout their lives. And sometimes with real estate, they'll continue selling that real estate, getting larger and larger properties, and deferring their taxes using the 1031 exchange we mentioned earlier in the video. And if they were to sell that property that they have, they would pay massive capital gains taxes. But instead, they let their heirs inherit these assets. And when their heirs inherit these assets, the heirs are receiving those assets at the current fair market value at the date of their death and not the original purchase price. So what happens is this step up in basis actually eliminates the capital gains taxes on all the appreciation that occurred during the time that the person owned the asset, whether that be real estate, stocks, or what have you. So this helps facilitate tax-free transfers of wealth between heirs, and again, eliminates taxes on the gains that they would have incurred had they sold these assets during their lifetime. So this is just a handful of strategies that millionaires use, but I hope this is eye-opening here. I hope that you see that all these strategies that they are using, it's not some black box or some black hole or some mystery. These are legal strategies that you can use too, if you apply them to your situation, to reduce your tax bills just like millionaires do. All right. So if you do like this video, you do want to catch more tax savings videos, go ahead and hit that like button, hit the subscribe button, and drop me a comment if you do have any questions. More than happy to answer as many questions you have. Do you have topic suggestions? Do you want me to dive deeper into any of these strategies and flesh them out even more? Let me know. More than happy to do that. And I'll catch you in the next video.